this is LA Little, and this is your daily TA wrap. We're going to take a look at these markets. We're going to look at them from a neoclassical perspective, and we're going to ask ourselves what happened today and what might it tell us about the coming days. As I always do, I do a show 4 times a week, every Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. I'm glad you could join me. It was a busy day today, and we've got a lot to go over. If you have questions, you can email me, support@tatoday.com, or you can text 303-912-9110. Either way works. Support@tatoday.com or text me. I've got a couple of questions lined up already. You can also type them in the chat room if you so desire. As far as the markets, what did they do? Well, it was a nice big day up. We've been talking about we were probably going to get some more up, and that's exactly what we got. It's the first of the month. They wasted no time. They just ran them high from the beginning, never pulled back. The laggard today, actually it was the S&P. I was about to shade the Dow Jones, but the S&P was the laggard. But it did get up to 1978, almost 1980. It was pressing higher, up 0.67. Dow was next, but the big winner again, Russell. We're going to talk about the Russell because the Russell actually had an important day. Dollar was up slightly, silver and gold down slightly, bonds got hammered. These quotes are late today, so they did get hammered during the day. Oil, copper, so forth, not much change there. So that's kind of what that looked like. But let's pop into the charts because we got a lot to talk about over here on these charts. So let me get the charts up. And let's start with the S&Ps as we always do. Today we actually got a break over the highs. And on the S&Ps, what that means is that we've got now a situation where we have nested ABCD structures on the way up. And so that's about as bullish as you can get, right? You had this long, big one that stretches up. Price point on that one is up around 2022. But now you got the little one inside of it, right? From here to there and back up. And that one measures out to about 1987. So 87, we're at 74. That's not that far away. 13 points. 13 points, really nothing in this market, so we could get there in a hurry. But you got nested ABCD structures. Volume expands just a little bit today, nothing big. But that looks pretty positive. If I look at the Dow, the Dow actually had a failure at the highs. So you had volume at the highs on that big triple witching or quadruple witching day about a little over a week ago. Goes over it, almost gets to 18,000. Excuse me, 17,000. Drops back underneath it on lighter volume. That's a test failure, both price and volume. That says that thing should try to pull back. And so the Dow, even though it has an ABCD structure out there to 17,097, does look like it's going to try to come back. If I go over to the Nasdaq, the broad composite, what does the composite do? Well, nice big strong day up, gets up to 44.71. And what does that do? Well, that finishes off the ABCD structures that were in place here. There are no more. You had 2 of them, and I'm guessing here, I believe the one that was still in play was this one. That one got finished off today. And then you had a little nested, you actually had, if I remember right, we actually had 3. They all measured to about the same place, it turned out, because you had another one here, and this one finished today as well. So you had 3 of them finish off today on a nice big surge up. That says this thing's done. Will that cause it to crash and burn? No, but will it cause it to slow down? Probably so. So a Nasdaq Composite is just about done what it wants to do. It actually has done what it wants to do. The NDX has just about done what it wants to do. That one's at 38.94, got as high as 39.02. It had a bullish ABCD structure in place to 39.16. So there could be a little bit more push coming here. But this guy is also just about done. So we've had ABCD structures set up, multiple ones inside each other. They've finished off, and now we got one small one left. So if you're getting the picture here, we've got the Dow failing. We got the S&P's got a nice spike up, can get another spike and finish off another ABCD target, the one it started today. We got the IXIC, the Nasdaq Composite, has finished off 3 ABCD nested ones. Remember, we were talking about there's a good chance it was going to get to those and finish them off because they were nested. It always adds value, adds a lot more punch to the bowl, if you will. NDX, a couple of nested ones, got rid of one of them, it's got a little bit farther to go on the other one. And then we come to the Russell. Now the Russell actually has ABCD structures in place as well. You have one that stretches back from here higher, and that one measures to 1208, and it finished it off today. There's another one that measures up to 1217, and I'm trying to think if that was a weekly or not. I'm not sure. I think it's on the weekly. Let's pop to the weekly. No, it's not on the weekly. It was on the daily. So anyway, there was 2 of them. It finished off one today, has another one. But what I want you to notice is today the high 1213.55, 1282 was the high, 1.7 there. You're doing about 622. It's not going to have the volume. On the daily, it's a failure because that high also accounts on the daily. It's a failure on the daily. Could be a failure on the weekly, both on price and volume. And I've talked about this before, that what we were expecting to happen was this V-shaped reversal. All these indexes was waiting on the Russell to get back up here and probably fell at the highs. Well, today was the failure. Does that mean it's going to be done? Well, I don't know if it's exactly done, but that certainly means that it's going to slow down. So we've got a little bit more. This one can stretch out to finish off one more ABCD structure. We got a little bit more on the S&Ps for one of those 2, and we got slightly more on the NDX. But the Nasdaq has already finished them off, and the Dow has failed, and the Russell has failed. So mixed bag extraordinaire, I guess. It was a little bit mixed last night. I would say it's more mixed today. That's probably the way I would probably characterize it. If I look at the sectors, mixed here as well. If you look at the IYT, gets over the highs. That one, I frankly don't know that it's going to get that much higher. I still think you actually have a range trade in place here. We'll see if it can carry through tomorrow. I suspect this thing isn't going to, but then again, betting against a bull market's not always a good idea. So we'll just have to see if it fails up here or not. But it is over it today, and we'll see if it can try to stretch higher. And by getting over it, you've set up an ABCD structure, right? You got one here now. They're not large now, but there are farther up. So we may see this thing stretch a little bit higher. SOX, that one fooled me. It certainly looked to me like that one was going to fail, no doubt. This sector has been strong. Remember, we had an ABCD structure on the weekly still in effect up to 89.99, almost 90. We're $2 away from that, from today's high. Doesn't have the volume, but this thing looks like it's going to try to get up there. So this one's strong. This also would help the NDX get to its target. XLB pressed the highs today, but it couldn't get over them. As a matter of fact, it just couldn't stay over them. It got over them, less volume. That's a test failure on price and volume at the highs. It also has an ABCD structure on the weekly, but again, we're talking weekly, so this thing could pull back in between. So today, test failure. That's either probably neutral to down. XLE really struggling. I'm going to pop it up. I'm going to pop over the XLF next, though, because the XLF, which is the financials, test fails on price but not on volume. That's going to try to test again tomorrow, and we'll see if it can break over it. XLI is really struggling. XLK, as you know, is already up and over the highs. It looked to me like it was going to fail, but it got over them. Got the volume. That one can push higher. Again, SOX, XLK, NDX, all the same sort of story. So we may see a concentrated move in, like, say, Apple, or the Apple and Google, you know, the three big ones, Microsoft, Apple, Google, and maybe some of the stocks too, to push that NDX up to where it's trying to get to, and finish off the XLK's ABCD structure too. XLP struggling. XLU actually was looking pretty good. Takeaway bar today, lighter volume, but all the way back down. It is an inside bar, didn't make it to the top or the bottom, so tomorrow will be a pretty big tell on it. XLV still pressing higher, and the XLY, remember this was the one struggling. Well, tested twice. If you remember, we were testing into a retest regen zone down here twice. What does it do? Over the highs, baby. Back up, all the way back the other way. Regenerates, and if you remember, not one sector or index failed on those regenerations that came over the last 2 to 3 weeks. The XLY was the one that came closest. Remember, this was a full retest. There was a swing point low over here. Actually, it was a swing point high. It came down, did a full retest, regenerated, came back, tested again, regenerated one more time. So, and that one now is over the highs. It's a definite regenerate. So, mixed picture in the sectors, but you know, this market can still push a little bit more given the strength that's there. If you look at the OX markets, let's start with the bonds, because the bonds really got hammered today. The bonds have been setting up to try to come back, and they had surprised me. You know, I even said something last week that there was no way, right? This was a high. I'm not sure exactly what the terminology was, but one of my members gave me a hard time about it the next day. 113.10 was the high. I remember it came up and tested here, it failed, and then I said that thing's going to come back. Well, it went up and hung 3 more days. Today it gaps down. Volume expands a little bit, not too big, but it is coming back down now. This thing's got more work to do on the intermediate term time frame, so I'm not in this name. At some point, I think it probably goes higher, but I don't know that that's right now. Dollar's still struggling. FXE did do a failure today, did an over-under, and the XLE had already finished off another ABCD structure. It had 2 or 3. It's kind of hard on these because they gap around so much, but this one had finished off 2 nested ABCD structures, and so now it goes over, back under. That one suggests it's going to try to pull back. The key now is this bar, and you got the ECB reporting their decision on Thursday, and that's going to be a major piece of news with respect to this and with respect to the European stocks. 134.91, got the 134.95. I would expect it test into it tomorrow. We'll see if it stays in it or not going into Thursday. That ECB meeting, announcement, press conference, the pundits are all saying, hey, you know, it's a done deal, nothing's going to happen. I wrote an article today. If you want, you can check it out. It's on the front page here. Is it time for the ECB to go all in? And what I'm talking about is, if you think back and you look at what happened with Japan and how they did the kamikaze move, right, where they just kept coming in waves, you know, one after another. I don't know that it's going to get them to where they really want to go, but it's an all-in bet, right? There is no turning back. Either you make it work or you're in deep, deep doo-doo. I mean, forget 2 decades. We're talking probably 2 or 3 more, because it's a disaster if it fails. And I still think it probably will fail when it's all over with, but you know, that's neither here nor now. That's somewhere down the road. Europe, they've been the most reluctant to join the QE train. I mean, you got it everywhere but Europe in terms of major economies. If Draghi, if Super Mario doesn't keep coming at it and pressing it, right, the market thinks it's a one and done. If he doesn't come out and do something Thursday, then they are going to think it's a one and done, and you're not going to change the mindset. So from that perspective, I think there's a chance that we're going to see that actually turn around and Draghi do something. Gold over under. Gold's been pretty extended, trying to get to the swing point high, 128.25. 128.12 today. Does 8 versus 18. 128.04 closes. Yep, that's a failure. That's a little over under. It looks to me like gold's going to come back in here and test this area. And you know, again, it's going to be important what happens with Europe come Thursday. Let me see what silver did today. I did see a big rush back into risk everywhere today, and we can look at that in a second. Here's silver. Silver, how many times can silver test fell at the highs? Another one today. So that one also looks like it should try to come back in. Talking about jumping back in, you know, feet first. FM, the frontier, you know, the high risk overseas markets, that they got a huge spike back up. And if I look at the emerging markets, EEM, also a spike back up. That is a retest regenerate off that prior high. That one should go up and try to test the highs again now. So you had a retest regenerate off of this area, did a full retest, right? Got underneath it, back over it, closed in it, worked its way up. Now it gets the spike. Going to try to test this area up here. That's the test. You get over that, you can run again. So, you know, mixed market, but still not too bad. Not too bad at all. Let me see what the Asian markets looked like last night. Actually, let me start with Europe. And then I'm going to get to a couple of questions real quick and any that you might have here in the room. Where is my world markets? There they are. It looks like I didn't get quotes out of Asia for some reason tonight. Let me see if I can pull them again here while I'm doing Europe. Okay, so the CACs. Let's take a look at the CACs. All right, so the CACs bumps up. Not a bad move. Yeah, that's yeah. You know, we were talking last night. The key spot is here. It looks to me like it's going to try to work up some more tomorrow, and then we'll see what it does when it gets there. So, really, I don't know that that tells us much today. It did get a little volume as it came back up, which is probably a good thing if you're reading it that way. Here's the real test. This is the DAX, 98.98, and it got to 99.02, closes at 99.02, so it's over it. So less volume, but back over that big bar, and that suggests it's going to try to climb too tomorrow. This is 1013, excuse me, 98.96. So this is interesting. Okay, so we actually have a better test coming tomorrow in the DAX in front of the ECB. And that's off this bar, right? That's the last time you had some decent volume other than this triple, quadruple witching day where you've got volume spike at the highs. This will be the test tomorrow. Can you get back over this little area here? And if it does, right, and you're sitting up in here when the ECB announces, you can certainly go after those highs again. So important night tonight, our time in Germany. We'll see if Germany can push up there. Let me see what, well, I can't get the Hong Kong quotes, it looks like, and unable to get the 8 shares in China. Here's Taiwan, another big strong move up. This thing's been on a roll. Let's look what Japan looks like. Japan going to go back after the highs. Now the big bar here is 15,375. And get over it, back under it. That looks like a failure. So that one probably is going to try it again because it hit it with okay volume, but I doubt it's going to get over it now, especially with all the news coming. So let me quickly look at Australia down at the bottom of the range again. And I don't think I got quotes out of Toronto, and I didn't get them yet. So nothing out of Toronto. And how about the FTSE? I missed that one. FTSE back up. Well, that's interesting because this one had an ABCD structure on the downside, and it's trying to nullify it, right? Had this one set up, can't do it, Gets a little doji with volume though, and flips around and goes back up. That just tells you, you know, broke 2 swing point lows. Here couldn't carry. That was the first sign. Couldn't carry again. This is a range trade. It's a big range trade, and it's holding. Let's see. Let me answer the questions that were emailed, and then I'll take any others that show up. So I had one that asked about Soon. We'd looked at Soon once before. This is a solar play. Let me pop over and get this entered in. So bear with me a second. S-U-N-E. Okay, so what do we got here? So the question is could you revisit it? It appears that it's pushing even higher and is above significant volume bars on the daily chart. Could this be short covering happening? And did we look at this and see that it had, I believe we did, I believe we looked at this and saw that it had huge short interest. Let's look here again. So I'm going to the trading queue because one of the things we have here, yeah, this has the huge short interest. So going back to the chart now, yeah, I think that's probably exactly what's happening. Anytime, and this gets more and more dangerous for anybody short, right? Anytime you have this huge short interest and you start creeping up like this, right? More and more just give up or have to give up because they don't know, you know, how far this thing can go. This still has an ABCD structure to the upside. I think when we last talked about this, we thought it would try to come back, but you know, it's still creeping up. It's got a big long, you know, it's about halfway to where it can go, and it keeps creeping up. I think on these types of stocks, you know, the short interest certainly plays into it. But a lot of it has to do with what's happening in the sector and what's happening in the general market. I think the tan was weak today, and it was. So yeah, I mean that one keeps going on lighter volume, but certainly keeps pressing higher, and that keeps the pressure on the shorts. On the weekly, over those highs as well, and it had decent volume. Yeah, this one may just keep pressing. It may just keep pressing them while it's got them on the run. So it's hard to buy it though. I mean, I think that was the conclusion we reached last time when we looked at this, and that was that it's just difficult to buy this because where are you going to put your stops? You know, where do the stops go if you're going to buy into this? Because you got maybe another halfway to go. You know, you got to give it back to down here somewhere. And so it makes it hard to make a trade in it. Other question here, let's deal with that one next. That's EWG. So the question is TA charts are unadjusted for dividends. There used to be a choice to look at adjusted or non-adjusted, but that's not there anymore. Anyway, if we look at a chart like this, the trend is now down because we broke a swing point low. And what we're talking about is we actually broke 2 of them. We broke this one and we broke one here. So it's down below this. Seems to be struggling, strong resistance zone. If we use an adjusted chart, the picture is very different. It's bounced up on strong support, blah, blah, blah. Shouldn't we be using adjusted prices? Well, you know, let's first talk about the idea that these are models, right? Models are something that you use to model reality, and they're not going to be 100%. And so you have to take that into account. But the more, and the reason I say that is because, you know, if you get a special dividend like Apple did once, you're going to get a huge spike down in your charts, and it's going to make the chart, it's going to change the picture of the chart. And that's on a individual stock. Here, same thing, right? Although here you're dealing with an ETF. When you're dealing with an ETF, you really shouldn't be looking at the ETF. You should be looking at the index. And so the index is the DAX. And we should be looking at the DAX. If you look at the DAX though, the DAX did trade underneath 2 swing point lows, and it is struggling. And so from that perspective, right, you are getting, in this case, you are getting a picture that is reasonably real. I mean, I don't think that's unreal when you look at this, right? You go underneath that swing point low, you get underneath it. Now the good thing is that it didn't get the 2 to 3 bar extension. And the fact that it didn't do it and came right back up suggests that this is not nearly as weak as it typically would be in this technical situation. You know, because like, you know, 80, depending on the break and depending on the time frame, you know, anywhere from, you know, I think it's like, I forget the numbers, but it's like 80 to 90% roughly. You will get that extension. And when you don't, that tells you that instrument is a lot stronger than you think, right? And in this particular case, it is. So I don't know that there's that much difference. I haven't looked. I didn't take the time to go look, but I suspect that there's a premium in the EWG at this point. So if you go look at the underlying value of the equity itself, the NAV, it's probably got a premium on it because this chart is not as strong. Now the other piece of that is the EWG. Again, it's an ETF. It doesn't exactly mirror what's in this index either. It's an approximation, right? Because the same weighting that's in the index is not the same weighting that you see in the EWG. There are some differences, and so that's one other factor to realize. So to go back to the question though, is shouldn't we use adjusted prices? I used to always use adjusted prices. That's all I ever looked at, because when I use profit charts, matter of fact, most of the charting systems are adjusted. Some of them give you choices. We used to give choices as well. We don't right now. We're going to be moving to another vendor at some point, and that vendor does not provide dividends, and that is a problem if you're going to try to adjust for dividends. And so we moved away from it. We still have the framework underneath in case we can put it back at some point, but right now it's been removed. And most people weren't using it. They were using the default, which was non-adjusted. So that kind of answers that question. I think this picture is okay. It's just a range trade though. This is turned into a range trade. And it's turned into a range trade because you tested down underneath these, right? And now you're coming back up. And it's probably going to go test that high because it's a pretty good volume up there at the high. The other side of this is it did come back to do a retest regen. That was another reason these did not trigger. And when you look at those statistics, when I say 80 to 90%, that says that you don't have anything in the way of major support underneath. Well, this one happened to have it because it had gone, remember, more than 6 bars before it did the retest, and now is trying to regenerate higher. So hopefully I didn't beat that to death, but that's kind of what's going on there. Another quick question here. Let me try to grab this one. I don't have much time. WY. It seems to have broken the swing point highs on the weekly. This is Weyerhaeuser. So this is lumber stock. And it did it with volume. And looks to me like it's still going to try to pull back and do an immediate retest regen. So that's kind of where that one looks at. Volume looks odd. I don't know. I'll have to look at it and match it up and see if there's an issue. But I don't know if you mean odd in that they don't look right, or odd in that the way that it's trading. Volumes look about right in terms of quantity. You know, I just think it's going to pull back some on you here. You know, this one, the heavy volume was on this pullback, so I think you'll see a pullback here. And that was a takeaway bar too. That was a complete takeaway bar on heavier volume. This one's going to pull back. All right, folks, that's it for tonight. I will catch you tomorrow. Thanks for joining me. Have yourself a great night. Until next time, I'm LA. This is and it was your daily TA Wrap. Take care. See you next time. Good night, folks.